Hello and welcome to the Wealth Doc Podcast with your host, Mike Heckman. I'm Wendy McConnell. Hi, Mike. How are you?
Oh, fantastic, Wendy. Thanks for being here. How are you doing today?
Oh, I'm hanging in there. It's like the winter tundra going on right now, but we're suffering through.
Awesome. Well,
Yeah.
today we're lucky enough that we have Jim Scatena with us. He's been a community leader in this area for quite a long time and has retired from being the chief executive officer for FloraCraft here in Ludington. And we met during a nonprofit community event when you were heading up FloraCraft. You want to talk about like when you were at FloraCraft as far as like your tenure there and what your role was there?
Yeah, absolutely. I was blessed to have 21 years as CEO and president of FloraCraft. FloraCraft is based here in Ludington, Michigan, and surprisingly is the world's leading manufacturer of foam products like styrofoam and the wet foam that florists use to put fresh flowers in. We have 4 manufacturing facilities around North America, one in Philadelphia, headquarters in Michigan, a plant in Arkansas, a plant in California, and a subsidiary plant in Mexico. So I was president and CEO, very active in the sales and marketing leadership of the company, and had all the general responsibilities that a CEO has. I retired about 6 years ago. Thought about hanging it up, but found out that there was a lot of value in this gray hair after 40 years of experience in the consumer products industry. So I started doing consulting work. And truthfully, primarily my consulting work focuses on rescue, dealing with companies or organizations that are in trouble and helping them turn around, and startup, a lot of startup organizations where I can take the lessons learned from the rescues and hopefully make the startups avoid them.
Awesome. So then is it like the small business that you focus it on, or is it medium as well that just have the extra trouble, or what's your typical customer look like?
Yeah, it's kind of like a funnel, right? So I get a lot of small startup companies who have nothing but runway ahead of them. And usually we're taking baby steps to grow them. And then on the other end, I take major companies who are selling major customers, like in the consumer products world, Walmart, and deal with very, very granular, specific issues. So I guess if I had room on my business card, it would say, I don't know a lot about anything, but I know a little bit about everything.
Awesome. Yeah. So when you hand out your business card, what's the job title that you have and how you're practicing now?
Yeah, so I banded together with a couple of former retired friends of mine, and our organization is called C-Suite Fractional. So we'll come into an organization
Fractional.
and we could be the fractional CEO, the fractional CFO, the fractional chief human resources officer, and my title is Chief Transition Officer because I'm dealing primarily with change.
Change management, change leadership, like succession planning, exit planning, or what is it that what you're doing there?
Those are some of the key words, actually. We swoop in and take kind of an overview of the business, deal with a lot of family owned, sometimes second, third generation businesses, get a lay of the land, and then identify what the problems are, and then get in there and make the changes to make those problems opportunities.
So I think you hit on something key there is that you help them evaluate like what the issues are where some businesses might think that they need to self-diagnose before they ask for help.
Yeah, good point. Another way I like to talk about that is one of the things I tell my clients is don't fall in love with your business because oftentimes, they head down a path and they're committed to going down that path because, they like it that way. And it may or may not be right for the circumstances. So it becomes a matter of kind of shaking that loose from them and saying, we've got to do things differently. That definition of doing the same thing over and over again and expecting different results. Yeah. Doesn't work.
Yeah. So you sound like you've had pushback on that, without naming anybody. Can you like tell like maybe like a time that's happened that might have not have been as obvious to the person that was too close to the process?
Yeah, a couple of different examples. It's especially prevalent in family organizations where, oftentimes your business is your baby, right? You birthed
Mm-hmm.
it, you raised it, but it's bad enough when that's a part of your family. So it puts a lot of emotion into the situation. The other issue with family businesses are sometimes more than one family member. Even as small as spouses involved in the same business, let alone cousins and uncles and aunts or second or third generation. There's this feeling, this legacy feeling that can be overwhelming, that like, what would my grandfather think if he saw me making this change?
Oh,
And so
wow.
sometimes you have to break it away from that emotion. And I've got pretty thick skin. So the beauty of that is I can be the bad guy.
Yeah.
And I would advise anyone, especially in a small business situation, when you need help and you reach out to a consultant, let that person be your bad guy. Sometimes delivering the message to your team, sometimes delivering the message to your family. Another one of our consulting slogans is everyone on the outside is smarter than anyone on the inside, and the last guy in is always the smartest.
Absolutely. I, I think I know what that means, but what does that mean, Jim?
Well, sometimes people that are too close to the fire or too close to the business based on bloodline versus training and education, um, the weight of their argument, the emotional weight of their argument makes it tough to get them away from that. So when an outsider comes in and makes an observation, the chief executive or whoever the leader is can then take a breath and say, well, I agree with you, Uncle Tom. We're paying this consultant to come in here and we ought to listen to him.
Yeah.
So sometimes being the outsider, being the disconnected, uninvolved third party does give me an advantage.
Fantastic. So then it sounds like, do you have a process that you follow, or does it change for the organization based on the first analysis, or how do you approach that?
Yeah, it's a great question. I mean, no two are the same, but there are a lot of similarities.
Okay.
My personal perspective is to go right to the P&L and the cash flow statement.
Hmm.
I'm going to hear about personnel issues. I'm going to hear about supply chain issues. I'm going to hear about cost increases. But when I look at the P&L, and it's surprising how many small businesses either don't have a good bookkeeping and accounting system or don't believe in what it's telling them. Yeah,
Wow.
I know sales are down 20%, but July is always a slow month. Well,
Okay.
July last year was a slow month. So if you're down 20% this year, all things are equal and it's even worse. So if you follow your P&L, first of all, develop one. But if you follow your P&L and follow your cash flow statement, pretty much I can see the problems or see the high level aspect of the problem and then drill down quickly.
Yeah. So do you find that a lot of these companies are not communicating with like a third party that they're hiring, or they try to bring somebody up from in-house and just doesn't have reliable data? Like where do you see that coming from?
Yeah, that's again another terrific question, Mike. It's surprising, especially in small business, the lack of reliable resources for small companies to engage in to help them with their financial statements. Most of the entrepreneurs, startups, family businesses that I work with are product or service driven. So they're
Mm-hmm.
really good at that. They know
Yeah.
how to make the best Italian spaghetti sauce or the best widget to sell to the automotive companies, but they're not typically financially astute. And especially in the beginning, are reluctant to bring in qualified financial assistance and observation because of the cost. And again, you really have to look at that as an investment, not a cost. So
Well,
there's
and then I'm what I also just kind of heard there, just kind of like didn't mean to talk over you there, but so if my ability is to make the best spaghetti sauce, I might not even know how to vet or what to look for financial plan or financial professional to bring into the system.
Absolutely. Almost 100% of the time. It's the issue of the right brain and the left brain, the creativity
Hmm.
side and the analytical side. And again, I'm going to dive a little deeper here for a second. The first thing that I like to look at is what I call, some people have a different name. I call it the bill of materials. When you actually, if we're talking about a product or a service, honestly, what
Yeah.
is your product cost? What does your service cost? Well, you know, the yeast and the bread and the water and the dough cost this. Oh, how about the overhead? How about the
Yeah, I was gonna say,
taxes?
yeah, the electricity, the maintenance, the
It
labor to
is
put it together. Oh, yeah.
amazing how they don't put and to establish a chart of accounts with every possible cost. And then the surprising one is at the end, most companies don't value their own time.
Hmm.
Okay, we caught all of the components, we caught all of the materials, we caught all of the overhead. How about you? Are you
Yeah.
getting a paycheck out of this business?
Mhm.
And again, basic misunderstanding of that P&L. One of my favorite stories I remember from one of my first clients, we got in and worked really hard. And it was a retail situation. And one of the memories I have is pulling up in front of the place one day, seeing the storefront of the building, then driving a block or so down the street to get a parking place. Because there was a car parked right in front of the building. And two things happened. When I walked up to the store, the weeds were about this tall out front. So, you know, I did what I did. I bent over and yanked the weeds out of the cracks in the sidewalk. And when the owner came out and saw me, he was a little surprised, maybe a little embarrassed. But there was a lesson I didn't even have to verbalize. It was like, clean this place up. But secondly,
Yeah.
he said, where did you park? And I said, you know, I'm about a block down the street. There was someone parked in this spot here. And he said, oh, that's my car. And I said, do you have any idea how many times a day that parking spot could turn over? He said, oh, I don't know, 8 or 10. I said,
Yeah.
yeah, so you just prevented 10 customers from coming in your store. For God's sake, park behind the business, park down the street, do whatever you do. But that day, after we spent about 6 or 7 hours really ripping into his business. When a day came and we shut the lights off, he said, how about if I buy you dinner? And I said, great, I'm not going anywhere anyway. And he popped the cash register button and took a $100 bill out. And I said to him, what is that? And he says, well, I'm going to pay for dinner. That's my profit. That's not your profit, right? What about the lights? What about the salaries? What about the cost of goods? That's your top line sale, if anything.
Yeah.
And don't confuse a sale with revenue, with income.
Oh, absolutely. So and not to mention, you know, the measuring that doesn't happen when you just pulled $100 bill out of the register, you know, as far as like any kind of accounting and deposits and all that. Oh,
Right.
wow.
Right.
So what kind of current topics are you seeing in like these small and medium businesses that need a little bit of rescuing, as we call it? So what are you seeing as like current topics of concern that is going around with what you're doing?
Yeah, there are a lot. And if you're a small business owner out there, you know that. You know that laundry list of problems and opportunities and to-do tasks is almost sometimes immeasurable. But there are 4 or 5 that I'm seeing and hearing a lot about this year. And we're at the start of a brand new year, so it's a good time to think about them. And they're not necessarily in any particular order, but
Okay.
pay attention to the broad economic trends. You might be a Main Street merchant. You might be a farmer sitting on 100 acres and you know, and selling your crops. You may be in a major city. You might be in a small town. The broader economic effects that are going on that you can find blasted all over the headlines, all over CNBC or Fox Business News, whatever a source of information, pay attention to those. A few, for example, that we all kind of, yeah, we know that, right? The impact of higher interest rates. We're going to talk about cash flow probably a little bit later, and cash that isn't yours costs a lot of money today, a lot more than it did for the last decade when money was basically free. So pay attention to those interest rates. Hopefully you don't need to borrow too much, although there's a strategy where borrowing is really a good tactic. But realize what's happened to interest rates over the last 2 or 3 years and realize what they've not only impacted you in borrowing, but your supplier costs, what they're paying for money, what your consumer or user of your product is paying for money. So pay attention to those broad economic trends, interest costs being one. The next impact of that is the increase in the cost of goods. I know very little that costs today what it cost in 2019, not even close. And by the way, for most of my clients, I tell them, we're not going to measure as much against 21 and 22, even 2020, because those were remarkable years at opposite ends. Some people saw dramatic increases in business because of the pandemic. People had to stay home. They watched more movie. They ate more pizza, whatever the case. In many ways, the pandemic helped people, drove their comparable sales up. And in other ways, it put them in really dire times. We need to, and I know it's sometimes easy, we need to erase our memories of the pandemic years and find a better base year. 2019 was usually a pretty good base year because a lot of businesses were doing pretty well pre-pandemic.
So like use what your business was doing that year, assuming that you're in operation, because there was so many less weird outliers with the interest rate and the inflation fluctuations, all that other stuff.
All of those crazy things that happened.
Okay.
So again, a lot of my clients are using 2019 as a base year and kind of forgetting about what happened in 2021 and even 22. So everything costs more. That's a generalization, I realize, but pretty much everything costs more. What are you doing about it? Are you bearing the price of those cost of goods? Are you raising your price to your consumer, your buyer of your product? Is that causing a deceleration of sales activity because people are reluctant to spend more money? And more importantly, looking internally, when I was the CEO at FloraCraft and we forecast maybe a 3% increase in cost of materials for the coming year. Our goal on the operations side was, what can you do on the operations side? And I'll define that if it needs defined, to offset that 3%. If costs go up 3, we've got to find 3 in savings. There are always, I mean, honestly, there are always inefficiencies. There are always, and again, that's where an outside third party pair of eyes is pretty good about saying, why do we have the shipping department over here and the doors to the trucks over there? And how many times a day do we push the carts 100 yards, right? Little things like that at the end of the day add up to profit. If I have a second, I'd like to tell a funny story about profit.
Yeah, please.
We were going through some really good times at the company and we were making, big sales increases. And I spent a lot of time on the shop floor dealing with people who touched the products every day. And they were starting to get a little disgruntled that sales were going up at a rate faster than their earnings were going up. So I did a really bad thing. I did a straw poll one week, just walking around to people and talking about, so what do you think? How do you think the company's doing? Oh, we must be doing great. Sales, we got that $100,000 order from that customer. So we have $100,000 more now, right? So, and it kind of goes back to the $100 in the cash register, right?
Yeah.
So I started asking people, for every $1 of sale that we get, every $1, how much of that do you think is profit?
Yeah.
And the estimates ranged from 90 cents on $1 to about 40 cents, right? 40% profit, 90% profit. So what we did was we broke our manufacturing team down into small groups of 10 people. And 10 by 10, we brought them into the conference room to educate them. We in the day that was called open book management. We weren't going to hide the financials. Don't underestimate your employees. They know what's going on. But the chairman of the board of my company was really tight about showing the financials. If they see us making too much money, they're going to want to raise.
Right.
And if we were making a lot of money, they deserved a raise. But what we did was we put 100 pennies on the middle of the table. And we said, there's $1. There's $1 in sales. How much of that do you think is profit? Don't take any pennies. And again, people said 90 cents, 50 cents, 40 cents. Yeah. So then slowly but surely, we started to take pennies. So how much are the materials that it costs to make our product? Let me save you the work. They were about 40% of the sale price. So take 40 pennies away. Well, see, now we have 60. Oh, okay. What about our wages? What about our insurance? What about our taxes? What about our utilities? Pennies. pennies, pennies, pennies. And suddenly that big circle of 100 pennies was down to maybe 4, 5, 6,
Okay.
which would have meant like a 6%
Yeah.
profit level on a $1 business, which
Yeah.
isn't too bad.
Right.
Actually, it's not too bad. And everyone was like, well, we still made 6 cents. Oh, wait a minute. What about our taxes? What about our income tax?
Mm-hmm.
There went 2, 3, or 4 more pennies. So that very visual example allowed people to see. And what it showed them on the other side was when their leadership came to them and said, we need to make a little change in our process, like move shipping closer to the dock door.
Gives us a couple pennies back.
But remember what a couple pennies did, right?
Yeah.
If we only had 3, maybe now we have 5. That's pretty significant. So understanding your cost of goods, understanding what these price increases are costing, and don't let nature take its course. Have a plan to offset that. Sometimes you have no choice but to pass it on to the consumer. Sometimes you can go back to the supplier and negotiate.
Yeah.
Most times you just need to be more efficient.
Well, the economics will help me maintain my margin or allow me to maintain my margin.
Right.
So
sometimes it's buying, can I buy bigger quantities, get better costs? There's a lot of ways, but dig into your own operation.
Yeah. So if you don't mind, we mentioned cash flow. Would you talk about that for a minute?
Yeah. It's, of all the financial reporting, to me, cash flow analysis, cash flow projection, is the most critical. I have actually painfully seen more successful businesses fail because they didn't manage their cash flow. Their growth outstripped the amount of cash coming back to sustain the growth.
Mm-hmm.
Than people who have succumbed to low cash flow when they were failing. Now, ultimately, the top line, the sales line, the revenue line, whatever you want to call it, has to come in to start the cash flow. But without knowing how much cash it sounds so simple, but all the sources and uses of cash. So it's just like a P&L. Here's all the source of cash. Below that line, here's all the uses of cash. And if that number between those two is red or negative, you got a problem.
Yeah.
Now, many businesses have cyclical cash needs. So therefore, they might have, like here in Michigan, where we live, Mike, we're in a highly active tourist town. In July, August, September, and October, you can't get in a restaurant in town. You can't get a parking place in town. Today, it looks like, Dodge City, ghost town. There's no one here. And if you're operating business with the same amount of cash burn in January as you were in July, you got a challenge. You're going to have a negative cash flow. Some people can sustain that. They have retained earnings or savings that they've put aside for these lean times. They have maybe reduced expenses like shorter hours.
Right.
Maybe they even close for a week or two. Maybe they shut down their restaurant for 6 weeks so they can do maintenance and cleanup and getting it ready for the spring and summer season. But there's a cycle in your cash flow that if you're not projecting it out and measuring it, you could get caught by surprise.
Yeah, especially if there's some kind of unforeseen business issue, and if you're running like on the line, now you're below the line.
Right, and that's another good point, and really leads me to step 2. Many businesses do, and many more should have a line of credit with their bank or their lender, whoever that might be. It should be on standby. It should be like the fire alarm. You only use it when you have to break the glass and get in. But if you don't have that flexibility, that cushion, and you get pushed into a negative cash flow situation for a sustained period of time, you kind of get your back to the wall and you really start to make bad decisions.
Right on.
People will say sales are down, so I'm going to stop advertising. Like I always say, McDonald's might sell 10 billion hamburgers a year, but they still have the sign up and they're still on the Super Bowl and they're still advertising, no matter good days or bad days, because you have to keep that continuity and projectability of your business. So to me, if I only had one accounting tool to rely on, I'd use cash flow. I'd
Yeah.
want a P&L, I'd want both, but if I could only have one, manage and monitor your cash flow and don't ignore it. Don't say, well, we'll catch up next month.
Right on. So, we're running close to time here, but I'd want to hear your thoughts on the difference between business exit planning and succession planning. I want to
Oh,
hear what
yeah.
your thoughts are on that before we call it.
Yeah, in my critical analysis of a business, when I go in to be the chief transition officer, that's my ultimate goal. And usually my first question, like, what's
Oh,
your
first
exit
question.
plan?
Yeah.
Yeah. And I think somebody once told me, it might have been you, that when you write that book on the success of your career, before you complete page 1, make sure you complete the last page of that novel. The
Yeah.
exit plan is critical, as it will guide your decisions along the way. It's kind of like your mission, right? Am I being true to my mission? If what I'm doing by making that decision doesn't benefit my exit plan, it might be the wrong thing to do. An exit could mean, am I going to sell the business at someday? Am I going to burn out and get tired and just want to get rid of it after I've made my money? Am I going to pass it on to my heirs, my children? Mike, the manager, who was such a good guy that I can turn it over to him at the end, say it's all yours now. Which then leads you into succession planning. In a way, they're almost the same. The exit plan is a little more broad. It talks about selling, how you would market the business, what you would do with it after that. Succession planning kind of means, for the most part, what are we going to do when I'm not here?
Yeah.
Who's going to take over when I'm not here? I mean, and even what happens if I hit the lottery? Or what happens if, more importantly, I get hit by the Budweiser truck? Who's going to run this business? Because if I had time in my closing statement, and I know we're running late, one of my cautions is watch out for burnout when you're a small business, right?
Yes. Yes.
And if you don't have a number 2 or a number 3 that you can delegate to, you're in trouble, because it's going to happen. You're going to get COVID. You're going to get the flu. Your plane's going to get stranded in the Bahamas, and you're going to miss 2 weeks of work, whatever it is. Allow for that delegation to prevent you from burning out, but also consider who's the next person or people in line to run this baby that I birthed and raised for 10, 20, 30, or 40 years. Before you write that first page and sign off on it, make sure you write that last page.
I think, just hit so many nails right on the head there. My entire exit planning thesis is that as an employee, we want to make ourselves as irreplaceable as possible so we can command that wage and have our organization rely on us. But then once we are in that business owner hat, we want to make ourselves as replaceable as possible. And that gives us better time when we're in the business. That helps us sell our practice or whatever kind of business it is for more, because people don't want to buy into a job. They want to buy into a revenue stream. And
Right.
the stuff that you're doing is just helping people do exactly that. Oh man, Jim, this was a great conversation. So if somebody wanted to get a hold of you, you want to share contact info, or how would I get a hold of you if I was a small business that needed some rescuing, or wanted to see if I could be rescued?
Sure. And my first and best is to always call Mike, because I trust the heck out of Mike, and he's a great financial advisor. So take advantage of him. But my contact information is really simple, and it's my first and last name, Jim, Jim, Scatena, Scatena, the number 1, Jim Scatena 1 @gmail.com. Reach out to me at any time. I mean that sincerely. I tell all my clients, you can call me 24/7. That doesn't mean I'll answer the phone, but you can call me 24/7.
Love it. While the iron's hot and the thought is there, call Jim. Awesome.
It's a good caveat to have, that you won't always answer. Okay, Mike. Well, how do people get in touch with you if they have some more questions?
Yeah. So if you go to thewealthdoc.com, that's a landing place on my website of saublepointwealthmanagement.com. And then if you want to do a phone call, again, you can call at any time, but we'll answer during business hours at 231-425-4308. The main office line is 231-425-4308, and we have a team available to help.
All right. Well, thank you to you both, and thank you for listening today. Please like, follow, and share this podcast with your friends Until next time, I'm Wendy McConnell.